But Dave Ramsey says always pay cash for your car, right? Never have a car payment. You'd have to save up, right? So in a sense, wouldn't you have to make yourself a car payment until you had the cash? You have to save money and literally you'd be making yourself car payments until you had the money to go pay cash for the car. So now let's say you save up 35 grand and you go buy a car and you spend $30,000 on a car. Okay. So now you have a car, you don't have a car payment. In 6 years, how much is your car going to be worth? Probably 15 or 20, right? Maybe if you take care of it and don't put too many miles on it. Okay, but your 30,000's gone. 6 years later, which is 12 years, right? Now your car might be worth a few $1,000s, if anything. So if you need to replace the car, what would you have had to be doing this whole time? Saving up money for a new car, right? So let's take our 35 grand and put it in the whole life insurance policy. And then within a few weeks after starting the policy, you can initiate the policy loan and you could take 90% of what you put in out. So that means you could borrow $32,000. So let's borrow the $30,000 from our life insurance policy, and let's pay cash for the car. Now we own the car. In 6 years, the car is only worth $15,000 or $20,000. And let's just say we don't even pay back the loan. The loan's just sitting there, but the loan is against the death benefit, not our money. So our money's compounding, right? In 6 years, that $35,000. But let's just use $36,000 for easy math. The $36,000 we put in the policy in 6 years has now grown by 50%. So it's worth $54,000. So now we still have a car that's depreciated to half, but our capital has increased to $54,000. Now 12 years in, when the car's about worn out, our original capital is $72,000. Even if we didn't save up for the second car, we could take another policy loan and buy the second car, right? But you're going to be responsible and not rob your own bank. So since we know that we have to save or put money in auto expense our whole lives, right? During this 12 years, just make small payments and pay back your policy. So now you have a free and clear policy. When it's time for the second car, you have $72,000. You could either buy a really nice car or you could buy another $30,000 one, do whatever, or you could use the money to fund a business or buy real estate or whatever else. So, but anything that you buy or any money that comes through your life that doesn't run through one of the infinite banking policies, you're just cheating yourself out of the money.